JP Morgan is a leading global financial services firm with assets of $3.1 trillion and operations worldwide. JP Morgan Chase Commercial Bank provides tailored financial solutions for organizations with annual revenues ranging from $20 million to $2+ billion. Commercial banking provides comprehensive financial solutions, including lending, wholesale payments, investment banking, and asset management products across three primary client segments: middle market banking, corporate client banking, and commercial real estate banking. Middle market banking covers small and mid-sized companies, local governments, and nonprofit clients. Corporate client companies covers large corporations, and commercial real estate banking covers investors, developers, and owners of multi-family office, retail, industrial, and affordable housing properties. In this presentation, Team United will be proposing suggested strategies to navigate the new normal. So what are other companies doing to overcome the lack of personal contact? Well, we know customer outreach is extremely important, especially during this time. Organizations have adjusted to working remotely and adopting the use of contactless technologies and digital experiences. Banking mobile apps have made it possible for consumers to carry out banking transactions through their mobile devices. Organizations are also focusing on safety and precautionary measures for their employees and consumers due to COVID-19. Social distancing, masks, sanitization, and ability for employees to work from home has allowed JP Morgan and other banking institutions to stay up and running and maintain transient competitive advantage. Because of the emergence of pop-up ecosystems, JP Morgan should focus on funding their research and development more and establish more creative partnerships. When my team and I conducted research on the firm, I led an extensive investigation on the external environment of JP Morgan's commercial banking. So here we have industry statistics and a picture of market consolidation. There is almost 2 million employees and around 4,500 of FDIC-insured commercial banks in the U.S. So the maturity of the industry is at this shakeout stage, which means the industry is consolidated between 1 to 5 large companies. We know JP Morgan is leading the investment banking with the highest market share, with 9% of the global revenue from investment banking. The average industry growth between 2015 to 2020 was 3.5% due to the improvements of business sentiment and rising interest rates. Now, growth slowed due to COVID-19. However, that rate is slowly rising due to vaccinations worldwide. For competitive landscape, the market concentration is consolidated and dominated by 1 to 5 major players. The competitors are Bank of America, Wells Fargo, Citigroup, Morgan Stanley, Capital One Financial, and U.S. Bancorp. For products and services, they offer checking account services, saving account services, deposits, and credit and debit cards. Now, because of COVID, the banks have needed to overcome the problem of the lack of personal contact. The industry's technology has gone to digital apps and digital signage, and social media presence has increased and is making progress in creating communities and platforms where clients can engage and communicate very easily. The marketing strategy has obviously had a stronger focus on digital marketing across the industry. Banks are focusing more on demographic targeting and loyalty programs to prioritize customer experience. This is a chart of the 5 forces analysis. Competitive rivalry is high because low switching costs from one bank to another intensifies the importance of competition from within the industry. Also, banks tend to sustain competitive advantage through offering lower financial rates than their competitors. Threat of substitutes is high because there is an increasing number of financial services that traditionally were only available from banks. Threat of entrance is very low because it is not easy for a new bank to enter the market and compete without a sufficient amount of capital, brand loyalty, and brand identity. Also, compliance costs and leisure costs are typically costs that are avoided by small to mid-size organizations. Buyer power is moderate. Individual clients have a low bargaining power because the loss of their account has little to no impact on the source of the company's revenue, and corporate clients have a high bargaining power because the loss of their account has a high impact on the source of the company's revenue. Supplier power is low because threat from individual depositors is low. However, major corporate customers and large groups of depositors tend to be a big threat. Next here we have general environment conditions. For demographic, we know it's business owners of small to mid-sized corporations, large corporations, and also realtors, startups, and scale-ups of organizations. For society and cultural, it's a remote work environment and communication right now. Customer segmentation with respect to their expectations and spending capacity is crucial. There is also a rise in development of small and medium enterprises, which is aiding in growth of commercial banking industry overall. For environmental, office environments are cutting back on energy use through digital transformation. Banks are publishing yearly environmental reports that highlight their environmental accomplishments throughout the year. Also, banks are going paperless. In regards to technology, challenges are arising in deploying sophisticated, technology-driven commercial banking services. As I said earlier, banks have mobile apps, but it is hard to transition traditional in-person banking practices to a new virtual environment. Next up here, we have industry success factors. We listed the 5 main points. Adoptions of technology such as reliance on artificial intelligence and machine learning. Importance of human angle, such as building trust with clientele. Capability of maintaining diversified revenue streams. Excellent organizational capabilities like offering all employees competitive benefits. And finally, brand identity is a key industry success factor within the commercial banking segment due to high market consolidation.
JP Morgan's mission statement is to be one of the best financial service companies in the world. Their vision statement is to aspire to be the best, execute superbly, build a great team, and a winning culture. The company continues to seek out the best talent in their sector to build a great team to help maintain their winning company culture. JP Morgan provides credit, banking, and treasury services to approximately 59,000 clients in the United States across 119 cities in the United States and 13 major international cities. In turn, this helps in the overall success of the entire global economy. JP Morgan values its employees and consistently rewards them for hard work, completing tasks, and furthering the business. Employees also strive to provide the best solutions for clients. When people think of banking services, their mind usually goes to JP Morgan. Why is this? Because JP Morgan is an established, world-renowned bank with an extremely strong brand image. JP Morgan serves as one of the largest and oldest financial institutions in the U.S. to date. JP Morgan serves as a competitor in multiple banking segments because they serve a wide range of businesses and individuals. JP Morgan accumulates large profits year after year because of their exceptional banking services. JP Morgan also has shown a heavily increased market share in many of their segments of banking, particularly commercial banking. Despite their many advantages, they do have some disadvantages like many other companies. JP Morgan tends to be overly dependent on U.S. markets, which has led to a decrease in their market reach. They also have some technological issues surrounding data breaches, which can overall lead to an exposure of clients' information. This is overall not good for their brand reputation. Core competencies are the resources and capabilities that comprise the strategic advantages of a business. Some of JP Morgan's core competencies include international lending in diverse markets, strong foreign exchange currency risk management area, investment banking, and customized solutions for a diverse set of customers. These core competencies aid in allowing JP Morgan to sustain their transitory competitive advantage in all of their banking segments, and it also helps distinguish them from their competitors. JP Morgan Chase Bank remains one of the largest banks in the United States by assets. In addition, JP Morgan remains one of the superior financial service holding companies in the world. JP Morgan maintains this transitory competitive advantage in the wide variety of banking services they offer, including consumer banking, investment banking, commercial banking, and asset management for individuals, corporations, institutions, and governments globally. JP Morgan provides exceptional customer service to their clients. They support the growth and retention of their employees. They act with integrity and responsibility. They maintain a workforce that is welcoming and inviting for people of all diverse backgrounds, and overall, they are driven to fulfill their clients' needs because their competitive advantage is directly related to their client satisfaction. When looking at JP Morgan as a whole, the company does very well financially in terms of net income. When looking at the commercial banking segment in relation to the company as a whole, one will notice that it generates a very small portion of its total revenue. In this slide, you see the company's total net revenue compared against the commercial banking segment's total net revenue. The commercial banking segment's net revenue was $9.3 billion, which is flat compared to the prior year, holding around 7.2% of the company's total net revenue. Despite the fact that the commercial banking segment only holds about 7.2% of the company's total net revenue, we believe that this is just an opportunity for them to continue growing.
We propose that JP Morgan incorporate an interactive Zoom coffee hour. This coffee hour will introduce an interactive morning routine that will help engage employees with one another. We propose a Zoom coffee hour in the morning of every Monday and every Friday where all employees share their favorite coffee and collaborate. The event could be named Coffee Talks. This would help keep employees connected virtually and will particularly be beneficial for employee onboarding. We also suggest incorporation of a social distancing networking event at the Guinness Brewery. COVID-19 has tremendously affected the commercial banking industry in a negative manner. Many face-to-face interactions with clientele have been cut off due to the concerns with COVID. Luckily, the COVID vaccine was released at the end of 2020, and now 22.9% of Americans have been fully vaccinated, and around 50% have received their first vaccinations. With vaccination spreading through America at such a rapid rate, everyone should be vaccinated by July, which can bring back personal contact between employees and clientele. Until this happens, the main issue at hand is keeping interactions as personal as possible without putting employees at risk. A great method attempting to move back to in-person interactions would be to hold a social distance event at the Guinness Brewery in Helthorpe, Maryland, with RSVPs mandatory, as well as a COVID vaccine card present. This will keep a similar face-to-face interaction as in-person without risking one's health, allowing employees to read clients' facial expressions. This type of event would happen once monthly in an effort to attract and retain more clientele. JP Morgan should try to increase brand recognition by increasing its engagement in the public. The best way to do this is by increasing presence on social media platforms, increasing commercials on TV, and creating YouTube pop-ups where customers will have to acknowledge. Those platforms catch the attention of most people in the U.S. and will serve as a useful tool when needing to increase clientele. That would also attract more millennials into the commercial banking industry. Another way to increase brand recognition is to partner with another well-established and well-known company. For example, the NBA. NBA teams wear logos on the left side of their jerseys for several different companies as a partnership and a sponsorship. For example, the Phoenix Suns use PayPal, and the Detroit Pistons use a Flagstar Bank, which is also a financial service company, on their jerseys. Due to the COVID-19 pandemic, many businesses have increased online usage and presence on social media platforms. Presence on social media could help companies and businesses gain more consumers' awareness and connect with customers virtually. JP Morgan could use social media platforms to answer all inquiries that users want to have. Having that, JP Morgan should allow 24-hour customer service reputation on platforms such as Twitter, Instagram, and Snapchat. On these platforms, JP Morgan could use interactive activities such as Q&As to answer consumer questions. They could also use polls to gain insights on consumer preferences and results in higher customer satisfaction.
I'm Andrew Bonin, and next we're going to talk about our loan growth projections after these strategies are implemented. So over the next 3 years, we estimate that there's going to be an average increase of around 2.8% each year in our commercial banking loans in the Maryland area specifically. Another great benefit for us that will help us to increase these loans is that the economy is going to be very stimulated after our COVID-19 pandemic when we went to that slight recession. Interest rates are at a pretty low right now. Loan growth increases higher than the overall revenue, and that's just due to our new costs that will be needed to try to implement these strategies. But overall, still a positive revenue stream for the next 3 years. Also, if we can get this partnership with the Washington Wizards, it would hopefully be a great marketing tool to gain a lot more commercial loan clientele over the next few years. The only negative of it is that it is a very high cost investment. So hopefully we can evaluate our financial returns through the next years and figure out if it's smart for us to do, because it will cost around $5 to $10 million. Next, we're going to be discussing our revenue growth projections. And as I said in the slide before, it is at a lower rate than our commercial banking loans will be growing, and that's just due to the fact of higher costs because of our new strategies we'd like to imply. So overall, commercial banking revenue is expected to increase by around 1.4% on average over the next 3 years. So that's up to 2024. And instituting these new strategies will help the business be able to grow while being the new normal. So having those Zoom meetings, making sure people are vaccinated before coming to some of our in-person meetups, stuff like that. And how we calculated out these projections for revenue growth and for commercial banking loans is from using past historical data and averaging out the growth per year, and then also applying our potential for new growth after these strategies are applied. And overall, JP Morgan has a very strong history of revenue growth through the past 5 years, other than 2020. 2020 definitely messed them up a little bit, but that's just how it worked for most companies out there. And the increase in cost is the reason we're not going to have quite as high of a revenue. But if we can generate more clientele with the plans we hope to implement, then our revenue should hopefully go up even more than what we project. Next, I'm going to discuss our headcount projections. So with these new strategies we'd like to apply, we figured we're going to need more people to help us get all these events set up and try to work out those partnerships, and along with becoming more active on social media. So we believe it's going to just need to increase marginally through the next few years, getting a little bit more people for the first year, 2 years, and then third, fourth year, maybe just a little bit less employees just to keep things going. Like I said, it's an average of around 3 new employees a year, starting off around like 6. And the Guinness Brewery is probably going to be what requires the most amount of people to plan and manage these events. And this is mainly just due to the fact that we're really taking a big jump trying to make this happen to get back to face-to-face. Of course, we said we're going to make sure everybody has their vaccination card so that people can feel safe there at the event while still practicing some social distancing. And then also, the only reason we really need these people is primarily for marketing, but also just for being able to manage these events and attend them. And for my final slide, we're going to just show you a quick snapshot of our financial projections and cost requirements for this strategy implementation. So as you can see, as I said before, there's a consistent growth in our commercial banking loans from 2020 to 2024. This is just each year what we're expecting it to be for the Maryland area. And then it shows our percent loan increase per year. We also have our revenue there. All these are expressed in millions as well, other than the percentages. And then if you go down a little bit, you can see our additional headcount required. So that's just each year. We figured in 2021 we're going to need a decent bit of people to help get these plans underway. And then as we go on, we're going to need less and less. And then also, as you can see, I add the number of loans, and we're thinking maybe an additional 2 loans for the Maryland area, commercial loans per year, if we were to divide the commercial banking loans by around $400,000-$500,000, which is the average commercial banking loan that is taken out. And now I'm going to hand it off to Dylan to discuss our strategy implementation.
For strategy implementation, so here we're going to be talking about how we're going to implement all 4 strategies that we have and how we're going to go about it. So first we have the Zoom coffee hour, and so before we even have this coffee hour, we're going to have a meeting with the board and tell them why we want this coffee hour and how we're going to inform all employees about this the coffee hour event. And secondly, we have the Guinness Brewery event. So we will need to contact Guinness Brewery and inform them that we want a event at their venue and get a price estimate and start budgeting for the event. And we will also need to tell them how many people will be attending the event. So to do this, we'll have an RSVP beforehand so that we can abide by the COVID capacity regulations as well. and to have overcapacity at a venue, which would also not be allowed. For our third event, we will be contacting a representative from the Wizards. So here we'll just need to calculate the total cost for partnerships within the NBA, which is about $5 to $10 million per year. Lastly, we will have the social media presence. So here we're just going to be networking on our social media accounts more. So basically, we'll need to hire customer representatives to interact with customers that have inquiries or anything about JP Morgan, and just be more interactive on our social media accounts. So that's how we will build our social media presence online. In conclusion, for our analysis on JP Morgan, we talked about our internal analysis, which included competitive advantages and disadvantages, the value chain, resource-based view, financial analysis, and then we talked about our external analysis within JP Morgan, which included industry statistics, the competitive landscape, the 5 forces within the organization, general environmental conditions, and industry success and evolution. We then talked about 4 strategies that we want to implement within JP Morgan, which was holding a Zoom coffee hour for each department, holding a event at Guinness Brewery, which would be socially distanced, potentially earning a partnership with the NBA Washington Wizards, and also establishing a greater presence on our social media accounts. And then we also gave a financial projection over years with JP Morgan. Lastly, we have our bibliography, in which we conducted our research on the JP Morgan case. Feel free to explore our sources that we have cited throughout the presentation. Thank you.